What's happening, family? So, today I decided to play around with, uh, the E-mini SMP, and I am also recording my, let's call it session, right? And we just had a New York session opened, as we can see here, right? 2 p.m. My time, right? Amsterdam time is basically when New York opens. And we have our DOMs or price letters in front of us, right? And basically what I'm going to do first is just, let price do its thing, right? Because most of the time when trading futures, the first few minutes of New York Open, they say it is not advised to trade because a lot of algorithms kicks in and the big players are at play and everything. So they advise basically not to trade immediately. But we will just see if something interesting happens, and let's hope we can utilize a few nice positions here. Now, I am trading with a simulation account, and I have basically here, right, a starting balance of $1,000, right? Zero profits for the time being, right? But since the E-mini SMP requires $400 a margin per contract, I will be able to trade at least until I reach another $400. With only $1,000, I can only trade two contracts, right? 2 times 400 equals 800. So let's just see what the price will do from here. I will just sit back a couple of minutes and just observe what is happening. And in the meantime, you guys can listen a little bit to the background music, sit back, relax, and whenever something interesting will happen, I will, comment or, narrate, share my thought process, I guess, right? So, yeah, let's just see what will happen from here. All right, so a couple of minutes has passed, and what I can observe is, well, the T-bills tend to stay at their current lows, right? Meaning that if the T-bills should break out their low of the day or daily low, then there's a good chance that the E-mini S&P should go higher, right? And we are also somewhat here in a range, right? As we can see, price was basically trading around the range, and then it went higher, and now it is trading around the range high, right? Now we have also our point of control, right? Or a fair value, as some may call it, right? So it should be interesting, right? If the T-bills should rise, then the E-mini S&P should, go lower, right? And obviously it goes the same way around, but then the opposite, right? If the T-bills go lower, the E-mini S&P should go higher. Also, we see here on the Nasdaq that we have a potential volume profile breakout, right? It should be very interesting to see if the E-mini S&P can follow, right? Because I have basically the Nasdaq here as the leader of my indices, I guess you can call it, right? Most of the time, if either the Nasdaq, Dow Jones, or Russell 2000, right? They are more often than not in correlation with the E-mini S&P, while the T-bills are more often than not invertedly correlated, right? Inverse correlation. So it should be interesting. And as long as, right, the Nasdaq is unable to break, right, then we can expect at some point it will come back to that point of control. And as you can see, the E-mini S&P, right, is following, right? A leader and a follower, so to say. Now we are somewhat back around the range low, right? As I pointed out earlier, right? This entire area, let's call it a mountain, and these small areas are basically what I like to call the valleys, right? And an important thing to notice is that whenever we tend to take a position based on the breakout strategy, either a bearish or bullish breakout, right? It can be very lucrative, as in, let's say the price breaks out here and we take a position, right? Now, the price more often than not, right, in general, moves a lot quicker through those valleys than these mountains, right? Meaning that if I place an order here, a buy order, right? I lift the offer, and then, let's say it goes well, 1-2 ticks, but then it comes back into that range, in which case I should be able to either get out at break even or perhaps 1-2 tick loss, right? If I decide to get out to, limit my risk, right? Sure, price can do this and then, again, go higher. But imagine that it, just like it did now, it wants to retest the bottom of that range, right? And while we are at the bottom of the range, we could look for absorption, backticking, right? And if the T-bills, let me, by the way, center everything like that. Right. So if the T-bills tend to fall down, then obviously here the price should continue higher. Now, it is definitely possible to trade within the range, right? As in range low, range high, because the price may, bounce up and down before either it breaks the low or breaks the high. And if the latter is the case, then more often than not, we not only will have a volume profile breakout out of the range, but we have also the daily high with, price levels which are not reached just yet. So it can lead also to a regular breakout, right? But it should be interesting to see if indeed, we get, let's say, a buy opportunity at the range low if it fails to break out to the downside. However, if it breaks out to the downside and we are looking for buys, then we should be very cautious because, again, in comparison with mountains, right, where the price moves a little bit slower, these valleys, price may move a little bit quicker, right? And most of the time, if the price tends to break out of a mountain, the rule of thumb is it will look for that other mountain, so to say, right? Let's say here, right? So let me try to center it, right? So let's say we have here our mountain, we have here our mountain, right? And we have here that valley, we have even here, and here pressure points, right? So those can be areas. If the price breaks out and continues lower, it should pass that pressure point with ease because it's very little volume, right? The battles actually happen in areas where there is a lot more volume, right? So if the price breaks out of this mountain or range, it tends to look for that other mountain, right? And that has all to do with, fair value and auction market theory. Now, imagine what I just showed you. We have here a range, we have here a range, and this is our valley, right? So this basically, let me try to pull up a whiteboard. Yeah, right? So in candlestick charts, it's more often than not represented with candles, which goes like that, right? And then we have that, drop, and then the market finds a new fair value, right? But eventually, if there is more demand and or supply, it will, again, let's say if there is another mountain here, right, it will look for that other mountain, and at some point it may come back, right? And at some point it may again come back like that. That is the basics behind fair value and auction market theory, right? Let me remove the whiteboard like that. All right, so let's center everything. Right, so the T-bills have risen a little bit, right? So it should be interesting to see if we can get, let's say, a breakout to the downside. But, I see also a lot of, here, for example, this low number is deliberately, more often than not, to see if sellers will attack, right? To get this number to zero so they can move the price a tick down. Right? But look, here we also have a valley, right? Now, as you can see, the sellers attacked very aggressively, right? In comparison with the buyers here. And let's look at the other T-bills. Yeah, I mean, we have here a point of control. So again, right, while we have a valley here, we have a mountain here, like that. And if price tends to move a little bit slower in that mountain, we have here a pressure point which could relate to this here valley, because the ZF 5-year yield treasury bill is a little bit more volatile than the ZB, the 30-year bill, right? Or yield, I mean, right, of the T-bill. And obviously we have the ultra bond, but those are just tools, right? Or one can call them perhaps even indicators. Now, obviously, if price is trading within that range, and as we can see, it's a pretty slow market, as I pointed out earlier, right? The price was about to make a breakout here. We had a little bit of absorption. Buyers got scared, pulled out their contracts, right? Which means that they have to sell it back, right? And 1 + 1 = 2, right? As in, yeah, if the buyers are pulling out and they are reselling their contracts, what can we expect, right? For price to push lower at some point. And in this case, it did come back to that range low, right? And now it is again going toward that range high. So that move to the downside could have been definitely a very nice trade, right? Unfortunately, I was explaining things and not, paying attention to make an entry per se. But now, if the price, right, again, tries to break out, right, and we see a lot of, buy contracts here printed in the inside tape, right, or inside print, and sellers are pulling out their contracts here, these are limit orders, then it can be very nice and lucrative to catch a buying position, right? So let's just see, because we see here 27 buy contracts versus 1 sell contract, right? So we should have a tick up now, but the price comes back, right? With 39.41 contracts. So it shows that there is a willingness of the sellers so far to defend that level, that range high, right? Because they are also, again, attacking here, right? But at some point, if buyers are starting to absorb every contract of the market orders of the sellers, right, they will stand and hold their ground. First, they will observe everything. And if the sellers get the idea that if there is an iceberg order, for example, right, then they will systematically get out of their positions as soon as the buyers attack, right? Because more often than not, they will get scared and they will not risk their, position to take the price again, let's say to the lowest, right? Or to that point of control. So far, I like the context of the market. Let's center everything again. Right, so the T-bills are all below the center line. I see here a lot of buying contracts, right, on the ZF in comparison with these selling contracts, right? And it may just pass that valley, but as we can see, the volume is thickening here, even though all those buyers made 368 buy contracts, right? They lift the offer, and it could mean that there is absorption here, right? Like, again, the sellers are deliberately lowering their number here to see if the buyers are attacking, right? And if the buyers are attacking, the sellers look, boom, like 12,000 contracts, right? If the sellers are holding their ground, they will see if the buyers will attack, right? If there is the willingness to take the price higher. And if the buyers are not attacking, the sellers will test the buyers here to see if there are still some buyers. We see some block trades here, right? It could be just to scare off those sellers, but at this point, yeah, sellers are definitely absorbing all those buy contracts at this point. It should be very interesting to see that if, yeah, like with 3 contracts, you saw what happened, right? Here, all the way to the right. Before that 21, there was like 3 contracts. Those 3 contracts, very low volume, pushed the price 1 tick to the downside, right? And now the price here is also, again, around that volume profile breakout. Let's see if I can catch any kind of position here. If sometimes it goes so fast. Now let's see. Okay, so 2 contracts. Yeah, so the Nasdaq just broke out of the volume profile. So should the E-mini tend to follow? I'm definitely interested, right? And here, all the way to the right with the T-bills, right? We already have 2 ticks to the downside. So add that to the Nasdaq is breaking out its volume profile. It should be very interesting, at least, to see a move up from the E-mini S&P. I think something may happen in a minute or 2. Now, usually I would like to see that price first comes at this price level, breaking out of that range, right? And then coming back to that price below it, i.e. back in that range. And then I would like to see a lot of absorption here, right? From the buyers, all the selling contracts, before I enter with a market order. Or if the price, let's say, goes here and tends to come back, I'd like to enter through a limit order. But let's just see what will happen here. Right, so this is basically 21 contracts. And if the price now ticks 1 tick up, let's see, we have a few block trades here. Well, crazy. Let's just enter here at this point, even though the volume profile is thickening, right? Excuse me. Yeah, because as you can see, the Nasdaq just broke the daily high, and it is a little bit more volatile than the E-mini S&P, right? But should the Nasdaq continue higher, and look here, the sellers are very aggressively attacking on the T-bills, right? Especially the ZF. right? It goes down. So with the Nasdaq breaking the high, the T-bill, very aggressive selling, I should expect for the E-mini to continue higher at this point, right? And all we have to do. So the context of the market at this point is basically giving me the green light. But I have to follow at this point, right? Like every second, to see if, these limit orders will either increase, decrease, and the same goes here, right? Like usually, as soon as I got a tick back, into that range, right, I will get out. And in worst case scenario, I can place my limit order like that and just suffer one tick loss. But it may also just be a manipulation of the order book, right? Because sometimes there is a technique called the lure, right? And what that basically means is, let's say, sellers deliberately show a low number here, and they expect that buyers will, lift the offer or, at least buy, right? And then there is probably a big player here which observes all the contracts, right? And at some point, that same trader will place dummy orders, right? He will make it look like, okay, all the buyers here who are taking market orders, right? They think, yeah, we have a big, large army of buyers behind us, and they will try to front run, right? At which point, this sellers observes all the contracts, hundreds, thousands, perhaps even millions, right? And as soon as he has reached his desired amount of contracts, right, he will pull out all these dummy orders, right? And by that time, the market will be in a free fall very quickly, right? To the downside, right? To fill up the last 5 to 10, price levels, right? Now, this should be interesting. I see 39 versus 36. So, yeah, there is a little bit buyers present at the range high again. By the way, I got out at, one tick loss there. So should the price now continue lower, right, then I will not suffer a major loss. I can see that the Nasdaq, again, because it's a little bit more volatile, it is going down. And here on the micro E-mini S&P, right, we see that, yeah, price attempted to make a breakout at the same level, right? Let me center it all like that. But at some point, it failed, right? And now, look, the sellers, totally absorbed everything here, right, at the top, preventing, again, a breakout. And if the breakout attempt 1, 2, 3 times fails, right, then, yeah, you can definitely look for the price again to retest the low of the range, as it is doing again, right? Now, obviously, this will not work every time 100%, but, it is definitely interesting to see the interaction between buyers and sellers going on, right? And let's just have a look what will happen from here, right? We can see, okay, 19 versus 18, and now, yeah, that was definitely, that price level was won by the sellers, but now the buyers aligning. Now look here, 52, 42, 60, right? In comparison with, well, I mean, at this point, they are relatively the same, but sometimes it just stands out, right? And that's more often than not before the lure technique happens, as in, yeah, we see a number like 80, 90, 80, 100, and here these small numbers, and the buyers think, well, there is a lot of buyers behind us, let's front run. They will take market orders, but that is the exact intention of the seller here, who observes those contracts until he or she or it, right, hits their desired contracts, right? After observing all those contracts, they will systematically pull out these dummy or fake orders, and then, you know, the price will drop, right? 5 to 10 ticks in a eye blink. But let's just see what will happen. Yeah, so ZF is just at its lowest at this point, right? And another thing, if the price already has 1, 2, 3 times tested the high and the low, right, of that range or volume profile or mountain, right, you should be cautious, because at some point you may think, well, let's enter at the bottom, right, and let's target the top. Well, and then price just may do this, and then, you know, it may come back to eventually make that breakout on the downside, right? So yeah, you can still get in here, and as soon as you see absorption and backticking, right, as in counterattack by the sellers in this case, then you could decide to get out early, right? But let's just see what the price will do again with this third attempt, right, to break out, because now the Nasdaq again is breaking out of that volume profile here at 805, right? $806, and now let's see. I will place a buy limit order at the most recent bid price. Okay, price comes, 6 contracts. It should get smaller, but it is not, right? 7. If the market now okay, yeah. Now, if the price moves higher, it should move a lot quicker, right, to the upside, because again, we have here somewhat of a mountain. So if the price ticks down and is here, I can get out either at my entry price, or if it goes lower, I can decide to either exit like this, right? I can now decide to place a limit order like that and get out, but you know, I was not able to do so because I was explaining, right? But that's okay, because we are in a simulated account now. This here somewhat of, you know, I guess is not a real pressure point, right, in comparison with other pressure points, right, like, because that one is basically within that entire range or mountain, right, like that. So if the price moves to the downside or upside, it does not mean that, oh yeah, it will continue like that, right? You have to look at the entire context. We are 40 minutes into New York session, well, 41 to be precise, and I just took my first 2 positions, right? Well, first position, but a quantity of 2 contracts. And at that point, I can again look at the T-bills. Well, they were at the lows here, right? And again, very aggressive attack by the sellers, but the buyers observe so far everything, and now they are backticking or counter attack, right, to prevent to go that price to 315 from where it is now, right? However, in this case, we would like to see for the sellers to succeed, right? As in to push the price lower, because if that one goes lower, then it should react on the E-mini S&P, right? Now, as we can see here also, right, the price is back within our volume profile area of interest, right? It basically again failed to continue higher, and we can see that same thing happening on the E-mini S&P, right? But again, it is very important to, you know, watch at the numbers, right? Yeah, sure, price came here, right? But it failed to pass that, well, I don't like to call it pressure point, but low volume price level in comparison with those others above or below, right? I mean, it should be very easy for price to cross that price level, since there is, well, little to, well, not no volume, but, you know, smaller, right? In comparison with 1800, 1800, 1800, 1800, 2000, right? And this one has 1200. So yeah, instead of continuing lower again to the range low of that mountain, right, it failed to pass that area, and now is doing again a attempt to push the price higher, but so far sellers are attacking again with their intention to bring that price indeed lower, right? So we have 40, 60, 60, 40, 40, 40, 80, right? So these 60, 60, 50, I mean, those could be block trades as soon as the buyers attack. And if those limit orders are cancelled, then it's basically spoofing, or they are trying to manipulate the ladder, as they call it, right? So let me put up my target right there. And again, right, I could have gotten out as soon as price goes 1-2 ticks against me, either at break even or with 1-2 ticks loss. But I guess it all comes down in making decisions, right? And look at this here on the ZF all the way to the right, right? We had very aggressive selling, and then the buyers very aggressively tried to prevent the sellers for the price to go from 312 to 310, right? But they absorbed everything and, you know, basically attacked again that lower price, right? And they have now a little bit difficulty from the looks of it to bring back the price higher. So should the price indeed still continue down, we have a breakout on the low, right? And the ZB and the Ultra Bond is also almost at their lows, right? And now look at this here. Nasdaq is, you know, creating new highs, right? And now the E-mini S&P is following so far. I already saw 80 contracts being absorbed, right? Immediately 22 and 28 counter, you know, contracts or backtaking. So let's see if the price now takes another price lower. I can decide to get out at that point, right? Because there is a pressure point here, as in, yeah, the price will cross that area faster, as we know. And if it, you know, in this case, when you trade the price ladder, every tick counts, right? But I will just do a stop loss at my entry point, right? And if the price indeed passes through that pressure point here, I can decide to get out and just go out with 2 ticks, right? Profit. I mean, it is not my initial target, obviously, right? But the objective is always preserve capital and, generate consistent and profitable results, right? Profits, that is. And, if the price comes back down and let's say I was wrong, my intuition was wrong, nothing prevents me to retake a buy position, right? But sometimes, price does not do that. It fails to pass that pressure point. I get out and then, buyers again are stepping in and then boom, price moves away. So at some point it comes down in making decisions, I guess, right? How conservative or aggressive you are. Now, in this case, yeah, the Nasdaq is definitely breaking out. But I see already that the price is moving away from this year ZF from the bottom, right? So, and I also see a little bit, absorption here with 29.14 counter contracts. Now it also comes here. So what I will do at this point, I will at least guarantee 2 ticks of profit, right? Obviously, I would like to see some more profits, but and if this year is taken out, the chances are that the price will continue higher. So what we could do is either get out here, see what the price is doing, and again look for a re-entry. But 40 contracts, let's keep an eye on this, if there will take place a absorption or not. But my point is, we can also move our TP a little bit further, right? Like that. If the price does not go higher, I can always still get out at this price level if it's here, right? And goes against me. Now we have another smaller volume profile breakout. 32 contracts has been transferred, right? 34. But look, these numbers are not reducing, right? They are getting bigger and they are not getting smaller, meaning that there are sellers here absorbing those buy contracts, right? And now they attack, right? So if these numbers will now get to 0, then the sellers will make a tick down, right? But as you can see, right, those selling contracts which were made are also just, absorbed by the buyers, right? So, and looking at the context at where the market is, right? If the sellers see that, yes, there is a willingness to retest the highs or even create a breakout, right? Then the sellers systematically will pull out their position or, get out at break even or perhaps 1-2 take loss. And what will they do? They will have to, buy again, right? Their sell contract, they will have to return it to the buyers. And that will again generate at some point a little bit more push to the upside because of the scary money, as they call it, right? If the money is leaving here, it is getting there. If the money is leaving here, it is getting there, right? Because you always have to have one buyer, one seller to fulfill a contract, right? And as we can see, the price just, breaks out of the high. Now let me move my stop loss, trail it. Oh, that was a very hard move to the downside, but yeah, at this point it just may continue higher after I got stopped out, but well, at least I still have profits, right, so far. So that's a good thing. And I see definitely some absorption here. So I guess I could have gotten out manually also and still have 4 to 5 additional ticks of profit. But you know, the objective here is just, you know, I guess thinking out loud from my side and look, observe, and you know, react to whatever the price is doing, right? So let's see if, you know, at some point the price, let's see on the ZF, yeah, it is still around. Well, the ultra bond is again moving up. This one is above the line, but this one is still below it, right? So let's just see what will happen. And if the price, let's say, comes back here, well, there's a pressure point. Let's see if we can yeah, it should be interesting at this point because I already see somewhat of a thicker volume profile building around the top of Nasdaq. But if the price here now creates a new breakout, it can be very violent and very fast. So preferably I would like to see for price to come back around this area before I can take another buy position, or if it breaks out, it will be a smaller volume profile, but nevertheless valid. But it is at the top of our daily range, I guess, right? So it can be turned against me very violent. But let's just see so far what will happen. Right. So this 34 versus 51. Again, this can be deliberately done by buyers, reducing the number to see if the sellers will attack, right? If the sellers are not attacking, then they will attack themselves, right? As you can see there. So again, 12 contracts. So it should be 10 contracts here, but you saw that 45 here, that was completely done by sellers, right? Yeah, so 77 contracts, totally absorbed, right? A little bit back taking. Okay, this one is also going back lower. This one tends to go higher. Ooh, there you go, right? Should be very interesting. If the price now goes to that level, I will try to enter with a limit order at this level, hoping that I will not be left behind, because at this point I see potential spoofing if that number gets reduced, right? But we also have that one here, so it should be very interesting to see. Yeah, 112 contracts. All right, the volume profile is thickening a lot here. Yeah, I just placed 2 contracts. Let's see if it will get triggered. Yeah, the Nasdaq is already. I wanted to say, okay, I was willing to sacrifice 1 tick to not miss out a position, right? And even though that the price is now 1 tick against me, right? Well, it says here 2 ticks, but probably because of the spreads, right? Yeah. Nasdaq keeps pushing higher. Right. Let's set our targets at 2 points or 8 ticks, right? Because if you look at this, 46, 46.25, 46.50, 46.75, 47, right? So these are 4 ticks, and 4 ticks is 1 point or cycle, as some may call it, right? You see how this volume is now thickening. So there is definitely a battle going on, because previously it was something like this, right? Like that. So at the top here, there are definitely, sellers, presumably who want to push the price lower back into that range, preferably to retest that point of control, perhaps even, right? But there are also obviously buyers, right, who want to take the price higher, since they already have broken the daily high, right? Breakout, they want to push the price higher. So there is absorption on both parties, and now it's just a question or matter who has the bigger money. Right? Now, what we can do, obviously, is watch and observe, right? Okay, I see this number. If it disappears, right, as soon as buyers are starting to attack, then presumably it is spoofing. But if they are getting bigger, which in most cases is not likely, right? And yeah, like this could be a good example of, buyers who are indeed absorbing, buying as many contracts here, and they put out a sell order here. Why is that? Because there will be sellers who want to front run, right? As in, they will click market orders, and that is the intention of this buyer here. He's saying, yeah, come on, just, offer me, give me your, contracts. I will buy it from you. At which point, and look at this number, 514. I mean, come on, right? And at some point, as soon as the buyer here, which has encouraged all the sellers here to front run and place as many market orders so he can reach his desired contracts faster, right? He will then pull out this here sell order, and if there are more sell orders like that, right, he will pull them all out, and then the price will fly to the moon. And there you go, right? Exactly my point, guys. Exactly my point. You saw how quickly the price went higher, right? At that point. I mean, this is just something that you cannot read in a candlestick chart, right? it just skipped those levels so quick that it was almost impossible for us to catch it with the naked eye, right? But it did happen, and that's the power of the price ladder, right? You can technically look inside of a candle. If this is a candle, right? Yeah, like we can see at what level is happening, right? These horizontal lines obviously present these price levels, right? Now that was a great example of the luring technique, right? Because the first time the sellers were able to push the price all the way down to that range low. The second time, the buyers did make a minor breakout, and then at some point when price dropped back in that range, right? Well, I guess I don't have to explain it. You guys can rewatch the video a couple of minutes back, right? But that is basically how, both parties are trying to manipulate each other, I guess, right? So let's just see, we are just crossing the 1 hour at this point, right? And I basically, pull up my trades like that, and let's see. Right, so when we started, we basically had a balance of $1,000, 0 profits, and now we have around $300 in profit. Well, actually $330, but these are fees and everything, which is fair, obviously, for us to trade. And 300 hours made in 1 hour time. Well, actually, I guess it's half an hour, you can say, right? Because the first half hour I was just talking, explaining, pointing out things, right? But yeah, that's basically how you can trade in the price ladder.